On August 27, 2024, a woman from Shandong identified as Wen Wei reported that she had withdrawn 50,000 yuan from a bank, but 30,000 of that was not real money.
The 30,000 yuan came in 3 different colors. This money was meant to pay the workers' wages. Look, one of the bundles was opened, and only the first bill is real. Look at the rest of it.
When Wen Wei brought the bills closer, the top one was labeled Special Bill Counting Competition Practice Voucher. This voucher is a prop used by bank employees to practice counting bills, and it has no legal monetary value. Wen Wei reported the issue to the police, hoping to find out the truth. However, the responsible department at the China Postal Savings Bank denied any fault, claiming it was impossible for the bank to give customers practice vouchers. The police said the matter was under further investigation. Despite the bank's denial, mainland reporters found that Wen Wei was not the first to receive such practice vouchers from a bank. Earlier this year, an elderly man in Tianjin withdrew 500 yuan. After spending 100 yuan, a store told him the remaining 400 yuan were practice vouchers. The elderly man returned to the bank to ask about it, but received a similar response as Wen Wei. The staff member said that all the bank's money passes through machines, so the bank couldn't have given him practice vouchers. They suggested his money had likely been swapped by someone else, and the bank was not responsible. Chinese media speculated that the elderly man's withdrawal likely contained only one genuine bill, the 100 yuan he spent, while the rest were practice vouchers. Since he didn't check the money before leaving, the problem wasn't discovered until he tried to spend it. Media reports concluded that the bank likely bore significant responsibility, despite the staff's attempt to shift the blame. Between August 27th to 29th, a protest related to a bank occurred in Guishi County, Henan. Villagers posted videos saying that they couldn't withdraw their savings from the local agricultural bank because the bank had used their money to fund a housing project. When the real estate company went bankrupt, their money was gone, and the bank refused to acknowledge the losses, leaving the villagers unable to win their case in court. In the video, a group of villagers gathered outside the bank, repeatedly shouting, "Apologize, agricultural bank." A woman in the video angrily exclaimed,
They are making money while we are busy fighting for our right. This cursed agricultural bank took all our money and refuses to take responsibility. It's infuriating. Who would have thought the agricultural bank would do such a thing? No one saw this coming.
Another whistleblower revealed that the head of the agricultural bank in Guishi County, Li Qijun, and others had deceived over 200 depositors, involving more than 100 million yuan, about $14 million. The bank refused to compensate, leading to protests, but every time the depositors protested, the bank called the police. The media suggested that local authorities and the bank were colluding. This wasn't the first time Guishi County's agricultural bank faced such accusations. Back in November 2022, 185 depositors reported that the bank illegally absorbed public deposits, causing them to lose a combined 87 million yuan, around $12 million. On August 5th, a man in Chengdu posted a video online, claiming that when he deposited money at a Bank of China ATM, the deposit was not reflected in his account. He immediately sought help from bank staff, who explained that the ATM may have jammed, a rare issue that could take 2 to 3 days to resolve. If the machine was undergoing maintenance, it could take even longer. The man became anxious and argued with the staff. "But I need the money now."
We don't have a better solution.
"Then just give me back the money. I don't want to deposit anymore."
But you already deposited it. That was your choice.
Later, the bank staff offered to check his loan eligibility in case he needed the money urgently. The man was frustrated by this solution and later told the media that it took 2 days for the money to finally appear in his account. The man's experience sparked a heated online debate. Some mocked the situation, saying, "Deposit not received, but a loan to the rescue? That's absurd." Others questioned whether people would stop trusting banks altogether. Reports of banks running into trouble have been increasing in recent years. Some small banks revealed that 40% of their books were bad loans. While bad debts are soaring in mainland Chinese banks, branch closures are also accelerating. According to Chinese media The Paper, by the end of May 2024, 1,257 bank branches had exited the market, a 30.4% increase compared to the same period last year. Most of these closures involved rural commercial banks and rural credit institutions, which accounted for 42% and 21% respectively. 16 foreign banks and 5 rural cooperative banks also closed branches. Since early 2024, over 60 rural banks in China have either disbanded or merged. At the same time, fewer new bank branches are being opened. In the first 5 months of this year, only 894 new branches were established. Aside from branch closures, banks are also facing increasing liabilities. One major factor contributing to the current situation is the collapse of the real estate companies. For the past 20 years, real estate has been the backbone of China's debt-driven growth model, accounting for 23 to 30% of the economy. However, new restrictions imposed by the Chinese government cut off the real estate developers' access to cheap loans, leading to a rapid downturn in the property market starting around 2021, with some large developers declaring bankruptcy or restructuring. Experts say the biggest problem for China's banking sector is that the once booming real estate industry, which fueled GDP growth and middle-class wealth, is now driving economic decline. Ordinary people put their life savings in the banks, which were then funneled into risky real estate projects. Now, those savers and small investors are only realizing that their money has been used in high-risk investments. A professional investment blogger Belouse used the example of Evergrande, a large real estate company in China with assets worth trillions. Yet, it defaulted because it lacked liquidity, illustrating that assets don't equal cash flow. Banks may have higher value assets, but only around 1% of deposits, around 3 trillion yuan, are kept as liquid reserves. This is used to manage massive transactions. Most deposits are used by banks to generate profits. However, the government's massive bond issuances are often in the trillions, which are draining this liquidity. It forces banks to buy government bonds, leaving them short of cash and having to restrict withdrawals. In other words, with the collapse of the real estate bubble, falling property prices, and unsellable land, local governments are running out of money and relying on the central government to issue large amounts of debt. Banks are obligated to buy these bonds, which drains their liquidity, explaining why they're now limiting people's transfers. Finance commentator Cold Eye on YouTube analyzed that no matter which way you look at it, China's economic downturn is unstoppable and bottomless. Traditionally, the second quarter is China's strongest, but this year's numbers are bleak, with GDP growth only at 4.7%, which is lower than expected. Domestic demand continues to fall, with retail sales growing by only 2% in June, the lowest since February 2023, marking a new low. Consumer spending is dead, and property prices aren't rising. Despite the largest real estate stimulus in history introduced in May, new home prices in June hit a 9-year low. The turmoil in the property sector has also affected smaller regional banks. Lynette On, a senior fellow at the Asia Society Policy Institute's Center for China Analysis, pointed out that China's weakest financial links are the 3,800 small regional banks in rural areas, including city commercial banks, rural commercial banks, and credit cooperatives. These smaller banks account for about 13% of total banking assets, but are much more vulnerable than the big banks. They've accumulated a significant amount of bad debt related to real estate. Ong highlighted that rural banks are especially fragile since they can only take deposits from local customers and are not allowed to open branches outside their province or offer services to customers registered elsewhere. This restriction leads them to partner with the government, often lending to real estate developers and projects, exposing them to the current real estate crisis. She pointed out that the Chinese government tends to allow local banks to proliferate during prosperous times to promote credit expansion. During periods of rapid growth, these small lending institutions are established quickly, but considerations like corporate governance and reserve requirements are often treated as afterthoughts. As a result, when the economy slows down, Chinese banking regulators are left to clean up the mess. With declining consumer confidence, depositors might move their funds from smaller banks to larger ones, causing more smaller banks to collapse and intensifying the cycle of bailouts, consolidations, and government takeovers. In addition, local governments weakening financial capacity means they can no longer continue to bail out struggling financial institutions. Financial commentator Cold Eye believes that the Chinese real estate market is at its most dangerous point right now. People shouldn't assume that the decline in housing prices is over. The real crash is just beginning. In fact, the crisis triggered by China's real estate sector isn't new. Chinese economist Xu Chenggang calls it a slow-motion financial crisis, driven by extensive government intervention. The government uses administrative measures, information control, and various other methods to prevent the financial crisis from erupting quickly, unlike what happened in the US. Under the American system, the government lacks the tools to intervene like China does, and if the US government tried to use similar methods, it would be illegal. On the other hand, the income levels of ordinary Chinese citizens are also impacting the operations of banks. Even though China has grown into the world's second-largest economy, this doesn't mean that ordinary people's incomes are rising at the same pace. In fact, due to economic restructuring and other factors, many industries are facing the risk of elimination, leading to fewer job opportunities and a heightened risk of layoffs. Reuters reported that a record 11.8 million college graduates this year are facing unprecedented job scarcity, with sectors like finance widely laying off workers. Companies like Tesla, IBM, and ByteDance have also laid off employees in recent months. China's unemployment rate is shockingly high. On August 16th, the National Bureau of Statistics released July's urban unemployment figures. The data showed that for urban workers not in school, the unemployment rate for those aged 16 to 24 was 17%. For those aged 25 to 29, it was 6.5%. And for those aged 30 to 59, it was 3.9%. This means that in July, the unemployment rate for 16 to 24-year-olds not in school rose to 17%, up 4% from 13% the previous month, ending a 3-month decline and reaching its highest level since the youth unemployment rate was first reported in January. Analysts pointed out that this figure doesn't account for millions of unemployed rural youth. Some young Chinese locked out of the job market are sharing survival tips for long-term unemployment on social platforms like Little Red Book, where they post under tags like unemployment diary and layoff, describing their daily lives and awkward conversations with managers, sometimes accompanied by crying selfies. Because many people can't find stable, well-paying jobs or struggle for years without promotion or salary increases, they are forced to invest significant time and money to improve their skills to stay competitive in the job market. However, this also reduces their ability to save. Moreover, some businesses struggling with operations are unable to repay loans on time, which directly leads to an increase in non-performing loan ratio at banks. At this point, banks may need to allocate substantial funds to cover bad loans, which not only reduces their profits but also impacts their capital adequacy ratios. To manage the risks of non-performing loans, banks must strengthen risk management and raise loan approval standards, which can in turn affect business growth. However, The Economist noted, cleaning up this mess is an extremely delicate task. Many banks were established to serve small businesses, especially in China's poorest areas. Those stuck with toxic debts struggle to supply firms with new loans, which can hurt vulnerable companies and local economic growth. If China's financial rescue system collapses, the stability of the entire financial sector will be threatened, potentially leading to social unrest. Consumers and investors may turn to hard assets or foreign assets, and China could face economic chaos, growing inequality, and rising unemployment. The long-standing economic contract between the Chinese Communist Party and Chinese citizens, where citizens accepted CCP rule in exchange for economic freedom, could break down as a result. What concerns the CCP the most, however, is that the collapse of poorly performing small banks could also threaten social stability. For example, the large-scale fraud uncovered at rural banks in Henan led to the freezing of depositor withdrawals at several banks in 2022. Ultimately forcing depositors to take to the streets to demand a resolution. Lynette Ong believes that the social impact of this event has already exceeded its financial scale. Chinese-American economist Li Hengqing, who resides in the US, told reporters that there are over 4,000 small and medium-sized banks like the Henan Rural Banks in China. Similar incidents are likely to unfold, and China is edging closer to its own Lehman moment. Cold Eyes analysis suggests that China's debt, real estate, foreign trade, and manufacturing sectors are all collapsing uncontrollably. The Chinese people are being left to bear the consequences, dragged into a miserable situation where the entire country sees no hope. Financial data reports indicate that China is in the midst of the toughest years of a depression,